What is going on, fellas? Welcome back to Debit Credit Nation. I know it's been long time. So today we are going to talk about how you yourself can pick up undervalued stock. The stock that you are looking for can be a mid cap, small cap or a large cap, but the fundamental remains the same logic, the same query you can run to find out the next multi-bagger. So let's get started. So I am here in the home page of ticker. So you can come here, click on ticker tape. So there are two options. The first option is you can mimic or you can copy and paste what mutual funds are buying. Okay, so for that you can go to the MF screener, click here, and here you will see this is a mutual fund screen. So here we see the CAGR 3Y, that means last 3 years compounded annual growth is shown here. So based on the CAGR, if I put descending, I will see which mutual fund is has fetched the highest return in the last 3 years. So this ICICI Pru overnight fund, it's a gimmick kind of thing. So 125 is next to impossible. Let's ignore this one and we can pick up the next one, which is a quant small cap fund. So you can go for the quant small cap fund here, click on it. Then you will see that 1 year it has given 40.96 and in 3 year it has given around 60%. So expand it. So once the fund loads, you can see here for 5 year it has given around 27.52% CAGR, for 3 year it has given 59% and for 1 year it has given almost 39%. So go to portfolio straight away, and from here you click on the current holding. So here you can see on the equity side what stocks it has bought. Almost 9.5% it has spent on Reliance, then HDFC Bank, then Bikaji Food International. So it's a small cap fund, so it is supposed to hold more small caps than the large caps. So only 2 large cap we see here and the rest all are small caps. So you can pick up your stock from here: Bikaji Food International, Usha Martin, Arvind Limited, Jindal Stainless Steel. So this is option number 1. You can simply mimic, you can copy paste from what the mutual funds are buying. First option. But the problem with this is the mutual fund, the fund manager, they keeps on rotating their funds. Today they feel they have confidence on Bikaji Food International Limited, but couple of weeks later if this company doesn't perform well, they will simply switch from this company to something else. But you as an individual may not be able to track that because you may not have that time. So without being dependent on other funds, we can create our own portfolio. So here I'm going to show you how you can pick up the undervalued stock which can give you multi-bagger return. So let's go to option number 2 where you will select on your own. So for that, let's go back to the screener. So here instead of doing the MF screener, let's go to the stock screener because we are going to pick up the stock. Now here, once the stock loads, you need to run a couple of query. The first query here, just expand stock universe and click on show 2 more and select the Nifty 500. So currently you see there are 4540, almost 4500 stocks are available in the market. So you cannot invest all 4500 shares. So you need to pick up the correct stock. So for that, just select the Nifty 500. And so now I am reduced to 500. I am left with only 500 stocks. So these are the Nifty 500 stocks available. So this is your first filter. After that, you scroll down. The next screen or the next filter that you need to put on is when I invest, I need to invest on stock which has a considerable market share. So what amount can be a considerable market share? So nothing is written. So I am just assuming if the market capitalization is more than 10,000 crore, then I think that's a good stock to invest on. So with the market capitalization of more than 10,000 crore, now I will select this. Now I am left with 358 stocks. Next, what you can do, I am going to get rid of the close price which I don't need. So close price I will remove. Then I have the P ratio. Next to P ratio, I am going to add the sector P ratio because I need to compare the P ratio along with the sector P ratio. Just click on this add filter and in the search you enter sector. So I have the sector P ratio done so that I can compare the P ratio and sector P ratio next to each other. Alright. Next I am going to find out the historic revenue growth. So I need to find out in the last 5 years which stock has given me at least 10% revenue growth. So click on this add filter and here you select revenue. So from here select 5-year historic revenue growth, and here expand it, and I am asking this screener to give me at least those stocks which has given me at least 10% 5-year historic revenue growth. That means in last 5 years the average revenue or sales growth is 10%. Now I have 224. Next, revenue is not enough unless you generate enough profit. So next filter is the profit margin. So I look for net profit margin, 5-year average net profit margin. Now I am saying that at least give me 10% profit margin, 10% profit margin. So I am left with 114 shares. Next, I need to add return on investment. What does return on investment mean? Return on investment means if I invest 100 rupees, how much can I expect as a return? So if I invest 100 rupees and I get back 118 rupees, that means 18% is my return. Okay, so now I am asking that return on investment for the last 5 years has to be at least more than 15%. All right, so here I enter 15. Now I am left with 55 stocks only. Next, I would like to see the risk factor. I am going to consider the risk factor. Risk factor means beta. So click on add filter and look for beta. Now what does beta mean? Beta means the risk factor. If I have a stock with beta of 1.4, it means if the market rises by 10%, my stock will rise by 14%. I am asking to give me a beta of at least maximum 1.5. So I have 46 stocks with me. Next filter I am going to put in is the promoter's pledge. Who are the promoters? Promoters are the founders of the business. While taking a loan, if the promoter pledges their share or keeps the share as mortgage, then there can be a trouble. That means if the promoter is unable to repay the loan, the promoter's share will be taken by the lender. So next I am going to look for promoter's pledge. So click on add filter. Here you look for, so actually for promoter I need 2 filters. So promoter, first I need pledged promoter holdings, and number 2 I need, okay, let's go ahead with the pledged promoter holdings. Now I'm saying that my pledged promoter holding maximum will be say 5%. That means beyond 5% of the promoter's holding, if it is pledged, then that is not a good scenario. The last filter I am going to add here is long-term debt to equity. Long-term debt to equity means the debts that the company has borrowed, which will be repaid in the next 5 or 10 years, not the short-term ones. I am not concerned with the short-term ones. Short-term ones will not hurt me, but the long-term ones will. Click on add filter. Now write long-term debt to equity. So here I am saying that maximum I can go with 6 times. Now I am left with 33 companies. So these are the 33 companies. I mean, not blindly I can invest in all these 33 companies. So let's see, if I do a filter, if I put a sorting based on the return on investment, or rather I would like one more filter because I am an equity shareholder, so return on equity is a must for me. So let me put the return on equity, 5 years average return on equity. Done. So I am saying that show me the companies which is giving me return on equity of at least 15%. Okay, 32 companies. So these are the companies which follows the above criteria. Now let me put a descending field on return on equity. So the first one is ICICI Securities. For the last 5 years it has given a handsome 63.61% return on equity, and you will see how does ICICI Securities stands out the other companies. Okay, but this is not the only criteria. So now next you are going to see, to pick up the undervalued stock, I am going to pick up the undervalued stock out of these 32. So you must see that you compare the P ratio with the sector P ratio. So sector P ratio means the P, the price earning ratio that is being prevailing in that sector, versus this is the stock's own P ratio. The stock's P ratio has to be less than the sector P ratio. So here it is more than the sector, so that this is not undervalued. Okay, then if I go next, if I keep on going, so higher, 23, this is close. See this one, Gujarat State Petronet. So the P ratio is almost half than the sector P. So this can be a good undervalued stock. Let's dig down into it. So let's just click on it. It will tell you that it has given 23% return in the last year. So let's expand it. So what does it say? So for 1 year it has given 24%, 5 year it has given almost 60%. So that's good. Now scroll down, analyst rating is 95%. Out of 100, 95 of the analysts are saying that it's a good buy. How to see whether it is actually undervalued or not? For that, you go down and go to the financials and click on normal view. Here you need to look for the EPS. EPS means earning per share. That means per share how much earning it is generating. So here per share it is earning almost 30 rupees. Okay, now I need the average EPS of the last 5 years. So just look for the average EPS of the last 5 years. Yeah, so from 19, so 19, 20, 21, 22, 23. So I have the average 5 average prices. So just copy all 5. So I'm just simply copying and opening up an Excel and putting all the values into Excel. So here I just paste it. These are the last 5 years EPS. Just get an average. Click on, just put the formula, average of the last 5 years EPS. So the average is close to 27. So in the last 5 years this stock is giving an EPS of 27. Find out the sector P. What is the sector P? This sector is offering a price earning ratio of 18.09. okay, again simply copy and go to the Excel and paste the sector P. Now multiply the last 5 years EPS with the sector P. That means the price of this stock should be 488. Let's see at what price this stock is trading. So the stock is trading at 287.25. It is very much undervalued. But hold on, is that enough to find out this undervalued stock? No, I need one more step, need to perform one more step. So this is the value that this stock should have, but just have a 30% margin of safety. So just reduce the value of the stock by 30%. So equal to this multiplied by 70%. That means I have reduced 30% for safe side. So with the adjusted margin of safety, the stock should be trading at 341 and the stock is now trading at 287. Now this can be a potential undervalued stock, because the stock has a potential of trading at 341 and it is actually trading at 287. Let's see at what discount it is being traded. 54 rupees discount per share. So this is how you can generate and you can find out the undervalued stock. Again, it is not a stock recommendation. You can run your own query and come up with one. Please be informed that I am not a SEBI registered stock advisor. So when you pick your stock, you do your own calculation. It is not a stock recommendation. So hope you like this video. If you love this video, just subscribe to Debit Credit Nation, and for this kind of content, press the bell icon. So we'll see you next time. Till then, bye bye.